Welcome to Personal Finance Deep Dives, where we help you make your money work for you. Today, we're diving deep into a topic that can truly transform your financial well-being. Yet it's often misunderstood or, frankly, overlooked by many of us. Credit unions. It's a space in personal finance that holds incredible potential, and it's really time we put it under the microscope.
That's absolutely right. For many of us, traditional banks are just what we grew up with. They're kind of the default setting. But credit unions offer a fundamentally different philosophy and approach to managing your money, one that often brings significant direct advantages straight to you, the member. Today, we're going to systematically unpack exactly what these unique institutions are, delve into how they operate, and explore why they might just be the perfect financial partner for you. Whether you're just starting your financial journey, maybe trying to save more efficiently, or even if you're an experienced investor looking for better loan rates.
Yeah, our mission today is really to give you a comprehensive understanding of credit unions. We want to arm you with the knowledge to dissect their offerings, weigh their benefits against, well, their perceived limitations, and ultimately empower you to decide if this unique financial cooperative is the right fit for your financial goals. It's about moving beyond assumptions and getting to the core of what makes them tick. Okay, let's unpack this fundamental question right out of the gate. What exactly is a credit union, and how is it truly different from a traditional bank? Because I think for a lot of people, they just hear bank and credit union and assume they're essentially the same thing, maybe just, with a different name on the door.
That's a perception we absolutely need to clarify. It's key. At its very core, a credit union is a financial cooperative. Now, what does cooperative really mean in this context? Well, think of it as a community of people, all with some shared bond, perhaps living in the same area, working for the same employer, or even belonging to a specific organization. They've come together to pool their financial resources. This collective pool then serves the financial needs of all its members. It's a fundamental distinction from a traditional bank, which is typically a for-profit enterprise owned by external
The
shareholders.
shareholders, right?
Exactly. These shareholders are primarily focused on maximizing their investment, meaning the bank's driving purpose is to generate the highest possible profit for them.
Okay, so if I deposit money into a credit union, you're saying I'm not just a customer in the way I am at a bank, but I'm essentially buying a share in this cooperative. I become a partial owner.
Right.
That's genuinely fascinating. A real paradigm shift from the usual banking model. How does that ownership actually translate into their daily operations and their overall mission? It sounds like a pretty significant shift in focus compared to what most of us are used to.
Precisely. You got it. This member ownership model radically changes their primary purpose. Their goal isn't to maximize profits that get distributed to external shareholders, people who might be thousands of miles away. Instead, a credit union operates with the financial well-being of its members as its absolute top priority. It's baked into the structure. Any income generated beyond what's needed for their daily operations, covering overhead, maintaining robust capital reserves, ensuring solvency, all that necessary stuff is returned directly to the members.
How does that return happen usually?
Well, this isn't theoretical. It often manifests in very tangible ways. Better interest rates on savings accounts and certificates of deposit, for instance, or lower interest rates on loans, car loans, mortgages, personal loans, and significantly reduced fees, sometimes even eliminating common fees entirely. Alternatively, these surpluses are strategically reinvested back into services that directly benefit the community they serve or to continuously improve products and offerings for members. Think upgrading their digital banking platforms or enhancing security features, things that make your life easier.
That sounds like a powerful distinction then. So it's not about making money off their customers, but genuinely about helping their members achieve their financial goals. It's a people over profit philosophy that really sets them apart right from the ground up. Is that fair to say?
You've hit the nail on the head. It truly is a people over profit philosophy that fundamentally distinguishes them in the financial landscape. Their not-for-profit status also grants them certain distinct advantages, notably being exempt from corporate income tax on their earnings. Now, this unique tax status means they have a structural advantage, allowing them to operate with narrower margins than traditional banks.
Ah, okay. Because banks are always chasing that quarterly profit number for Wall Street.
Exactly. Banks are constantly under immense pressure from shareholders in the market to increase earnings every single quarter, which often means finding ways to charge you more or pay you less interest. This fundamental difference means that the money a credit union generates can be channeled directly back to you, the member, or into improving the services you receive. It's about serving a defined community of people tied by that bond of association, whether that's a geographical location, an employer, or another shared factor, and providing financial products on the most favorable terms they can possibly afford. It's a virtuous cycle designed for mutual benefit.
So to crystallize that point, it's clear that the fundamental member ownership model isn't just some legal distinction. It completely reorients the entire institution's purpose towards your financial well-being. It fundamentally differentiates it from shareholder-driven banks. That brings us to takeaway number one. Credit unions are member-owned, not-for-profit financial cooperatives that prioritize their members' financial well-being over generating profit for shareholders, a core difference from traditional banks. That distinction, that people over profit mantra, really sets the stage. But as listeners, we're always asking, okay, great philosophy, but how does that actually translate into tangible benefits for my wallet? What does this mean for someone like me trying to make my money work harder every single day?
Right. This is where it gets really interesting for your personal finances and where the rubber meets the road, so to speak. Because they're not laser focused on maximizing shareholder profits, credit unions are consistently able to offer more competitive rates and significantly fewer fees. And this isn't just a slight edge you might barely notice. This can translate into thousands of dollars in savings or increased earnings for you over time. It really adds up. They simply don't have that relentless pressure to deliver ever-increasing returns to a distant board of investors or Wall Street analysts, so their unique financial structure genuinely allows them to pass on savings directly to their members.
Okay, give me some specifics then. What kinds of rates are we talking about? I'm curious about both borrowing money like loans and earning money on my savings. Can you paint a clearer picture of the actual difference?
Sure, let's break it down. On the lending side, if you're looking to borrow, you'll almost always find lower interest rates on a wide variety of loans at credit unions, much more often than not. Whether it's for a major purchase like a mortgage to buy a home, an auto loan for a new or used car, or even a personal loan for debt consolidation or unexpected expenses, credit unions frequently offer more favorable annual percentage rates or APRs than traditional banks.
Can you give an example?
Yeah, okay. Consider an auto loan of, say, $30,000 over 5 years. Even a difference of just half a percentage point, say 5.5% at a credit union versus 6.0% at a bank that could save you hundreds of dollars over the life of that loan. Now, scale that up to a mortgage where the principal balance is much higher and the term much longer, like 15 or 30 years. A similar small difference in the interest rate can save you tens of thousands of dollars over the life of the loan. That directly impacts your long-term financial health and how much equity you build. It's substantial. Now, on the flip side, when you're looking to save money, credit unions often offer higher returns on deposit accounts. If we look at data from early 2023, for instance, the national average rate for a 5-year certificate of deposit, or CD, at credit unions was approximately 2.66%. Compare that to the average of 1.83% at banks during the same period.
Wow, that's almost a full percentage point difference on average for a CD.
Exactly. And similarly, money market account rates were higher at credit unions, averaging 0.53% versus 0.43% at banks. Now, these differences, they might seem like small percentage points on their own, but they really add up, especially when compounded over time or when applied to larger savings balances. That's simply more money growing in your pocket rather than contributing to bank profits.
And what about fees? Because honestly, those can really eat into your savings and make banking feel like a constant battle against hidden charges. I know I've definitely felt that frustration before. It's like every month there's another small deduction for something I didn't quite understand or even agree to.
You're definitely not alone in that experience, and it's a critical point. Credit unions are widely known for eliminating or significantly reducing those common, annoying fees that traditional banks often charge. We're talking about things like the pervasive monthly account maintenance fees, which can slowly but steadily chip away at your balance, especially if you happen to fall below a certain minimum threshold, or high transaction costs for specific services, or even things like wire transfer fees. They tend to be lower or non-existent.
What about overdrafts? Those can be brutal.
Yes, overdraft fees are another big one. Credit unions are often much more flexible and forgiving when it comes to overdraft fees. Sometimes they eliminate them entirely, or they might offer more reasonable grace periods and policies to help you avoid them in the first place. Their mission is genuinely more about helping you manage your money efficiently and grow your wealth, rather than constantly nickel and diming you with charges that often feel unnecessary or punitive. They focus on aiding your financial progress, not just making money from you at every turn.
So it really sounds like more money stays in your pocket, whether it's by paying less interest on loans, earning more interest on your deposits, or simply by not being constantly worried about hidden charges popping up on your statement. That's a pretty compelling value proposition, especially for anyone meticulously managing their budget or just trying to get ahead.
That's precisely the overarching goal and the core benefit of the cooperative model. The money they generate, instead of being funneled to distant shareholders who might not even be aware of the community the credit union serves, is directly reinvested. It goes into offering you better financial products, enhancing existing services, maybe adding features to their app, and innovating with new solutions. This community-first strategy means that your deposits aren't just sitting idle. They're actively fueling local borrowing and investments, strengthening the very local economy that you're a part of. Because the institution is fundamentally owned by its members, it can then share those higher returns, those lower costs, and those enhanced services directly with you. It fosters a continuous cycle of mutual benefit. It's truly a cooperative model where members mutually assist each other towards common financial goals, building collective financial strength together.
So it's clear that credit unions offer compelling financial advantages. They aim to put more money toward your financial goals through better rates and fewer fees, rather than extracting it for external shareholders. That brings us to takeaway number 2. Credit unions generally offer lower loan rates, higher returns on deposit accounts like savings and CDs, and significantly fewer fees compared to traditional banks, translating directly into more money for your financial goals. Okay, beyond those clear financial benefits, the dollars and cents, I've heard a lot about the experience of banking with a credit union. The feel of it. What does that truly mean in practice? Does it feel genuinely different when you walk in or call them? Or is it just, marketing speak that sounds good on paper? Because a lot of institutions claim great service, but it doesn't always pan out that way, does it?
No, it doesn't. And this raises an extremely important question that goes beyond just numbers. What kind of relationship do you genuinely want with your financial institution? Credit unions are exceptionally well known for having outstanding customer service, and it's really built into their cooperative DNA. It's not just a slogan. They truly strive to understand each member's unique financial needs, personal circumstances, and long-term goals, and then tailor solutions accordingly. It's typically a highly personal approach, moving far beyond just simple transactional interactions. Get in, get out. The representatives are often encouraged, even trained, to spend more time with members, listening intently and understanding their specific situations, rather than being pressured by aggressive sales quotas to push products that may not be the best fit for you.
So less of feeling like just another anonymous number in a queue or talking to a chatbot, and more like a valued individual, because that's a common complaint I hear about the larger financial institutions, is the feeling of being, dehumanized by automated systems or rushed conversations where they don't really listen.
Exactly. That's the goal. You generally won't feel like you're talking to a call center script or constantly being transferred from one department to another without resolution. Representatives are typically focused on building long-term, trusting relationships with you, not just trying to meet fleeting sales targets that might not even be in your best interest. They want you to succeed financially. This inherent focus on people, rather than solely on quarterly profits, consistently results in significantly higher customer satisfaction rates when members are surveyed. For example, studies have shown that small businesses are an impressive church. 80% more likely to be satisfied with their credit union than with a big bank.
80%, that's a huge difference.
It really speaks volumes about the quality of service, the level of attention, and the genuine partnership they strive to provide. You're seen as a co-owner, a partner in the cooperative, and that fundamentally changes the dynamic of the relationship from the start.
That's a significant difference, and it touches on the personal side of finance that's often overlooked.
Hmm.
We focus so much on rates, but the relationship matters too. And I hear a lot about their community involvement. How does that manifest in real, tangible terms? Is it just, donating to a few local charities, or is it something more deeply ingrained in their operation?
That's a great question because it's often much deeper than just writing a check. What's truly fascinating here is their strong community-centric approach. It's not just an add-on or a PR thing. It's deeply ingrained in their cooperative structure and mission. Credit unions are often profoundly invested in the local areas they serve, supporting local projects, small businesses, and charities through a wide array of initiatives. This isn't just about financial contributions, it's about actively strengthening the community for everyone's benefit.
Like what kind of things?
For instance, many credit unions proactively provide comprehensive financial education and outreach programs to consumers of all ages, helping local residents improve their financial literacy and decision-making skills. Budgeting workshops, home buying seminars, things like that. Some even establish in-school credit union branches to foster sound financial habits from a very young age. So your money, in a sense, does double duty. It helps you achieve your personal financial goals, and it actively supports your neighborhood, local businesses, and the broader community, circulating within the local economy instead of being extracted.
That's a really appealing idea, that your money is working for you and your community simultaneously. And beyond that, what about exclusive perks or resources just for members? Does membership actually come with any special advantages that aren't available to the general public? Beyond just the better rates and service, what else is unique about being a member?
Absolutely. Many credit unions offer a wide range of exclusive member benefits, going above and beyond just competitive rates and low fees. This can include special members-only rates on services like insurance products or sometimes even investment services offered through partners. You might find access to unique member-only products tailored to specific needs. For example, specialized loan products for students, first-time homebuyers with unique requirements, or local small business owners trying to get started. They often provide valuable money management resources too.
Like tools and advice.
Exactly. Comprehensive financial calculators on their websites, free credit counseling services, debt management assistance programs, or even workshops on crucial financial literacy topics like budgeting, investing basics, or navigating student loans. Real practical help. Many also offer scholarships to members or their families, truly investing in their members' futures and education. This emphasis on financial education and empowerment helps members make truly informed decisions, extending the value of their membership far beyond just the immediate products and services they offer.
And you mentioned ownership earlier. How does that play out practically?
Right, and crucially, their democratic structure means every member usually has voting rights. Often it's one member, one vote, regardless of how much money they have in their account. This ensures your voice matters in shaping the institution's policies and strategic direction, like electing the board of directors. It truly is by the people for the people.
It's clear that credit unions offer a distinctly personalized and community-focused banking experience that aims to empower members beyond just transactions, reflecting a true partnership model. That brings us to takeaway number 3. Credit unions offer highly personalized customer service focused on building relationships, demonstrate a strong commitment to local community involvement, and provide exclusive member benefits, including valuable financial education resources. Okay, that all sounds incredibly compelling. The philosophy, the rates, the service, the community focus. But some people might still hesitate when considering a credit union, perhaps wondering if it's truly as safe and secure as a big national bank, one with a household name. Or maybe they worry if they'll have the same widespread access to their money and modern technology. Let's address those common concerns head on. Is my money really secure in a credit union?
That's a valid and very important concern, and it's one we absolutely need to lay to rest right now. I can assure you unequivocally, credit unions are just as safe and secure as traditional banks. There's no question about that. Accounts at federally insured credit unions are protected by the National Credit Union Administration, or NCUA, through the National Credit Union Share Insurance Fund, or NCUSIF. This is the credit union equivalent of the FDIC for banks, and it functions in much the same way. It provides a crucial, robust layer of security for your deposits, backed by the full faith and credit of the U.S. government.
So it's the exact same level of protection then. My $250,000 is just as safe dollar for dollar, regardless of whether it's in a giant bank or my local credit union.
Absolutely. The NCUA insures each account up to $250,000 per share owner, per insured credit union, per account ownership category. What that means is if you have, say, an individual checking account, a Roth IRA, and maybe a joint account with your spouse, all at the same federally insured credit union, each of those distinct account types is insured separately up to $250,000, so your total protection could be significantly higher depending on how your accounts are structured. This provides truly comprehensive protection for your deposits, ensuring your savings are secure even in the extremely rare event that the institution were to face severe financial difficulties.
Extremely rare, you said.
Yes, and in fact, if we look at historical data, it's quite telling. During the tumultuous period of the Great Recession back in 2008-2009, Banks were actually 2.5 times more likely to fail compared to credit unions. This was partly because credit unions, due to their member-focused, generally more conservative lending approach, had significantly lower rates of risky subprime lending. They demonstrated a more stable and resilient financial model during that crisis. So not only is the insurance comparable, but credit unions often exhibit greater historical stability.
That's incredibly reassuring, especially hearing about their historical stability during tough times like the recession. Okay, safety covered. But what about accessibility? Things like physical branches and modern technology. Big banks often boast branches on nearly every corner, which can be a real convenience for many people. How do credit unions stack up there in terms of physical and digital access?
That's another fair question. It's true that credit unions typically have fewer individual brick-and-mortar locations than the largest national banks, and that's a common perception. You won't see a branch on every single block usually. However, this is where the cooperative spirit truly shines again through collaboration. Many credit unions are part of extensive cooperative ATM networks. Think of networks like Allpoint or the Co-op ATM network. These can give you broad access to literally tens of thousands of fee-free ATMs across the country, often located conveniently in places like retail stores, supermarkets, or gas stations.
So I can use ATMs outside my own credit union's branches without fees.
Often, yes, if they're part of the same network. It vastly expands your fee-free access. Additionally, and this is a major advantage many people don't realize, many credit unions participate in shared branching networks. This allows you to walk into a participating credit union, even if it's not your own specific credit union, and conduct transactions like making deposits, withdrawals, or loan payments, just as if you were at your home branch. This significantly expands their physical footprint without the need for each individual credit union to build and maintain branches everywhere. It's a very smart cooperative solution.
Shared branching, that's interesting. I wasn't aware of that. And what about technology? Apps, online banking?
Right. And regarding technology, while it's fair to say that some smaller credit unions might occasionally lag in adopting the absolute bleeding edge of technology or app development compared to the largest banks, mainly due to differences in scale and budget, many mid-sized and larger credit unions have made tremendous strides in recent years. They now offer mobile banking apps and online services that truly rival those of much bigger for-profit institutions. We're talking about robust features like mobile check deposit, online bill pay, peer-to-peer payment services like Zelle integration, digital wallets like Apple Pay and Google Pay compatibility, and sophisticated online budgeting tools built right into their platforms. So you often get the best of both worlds, that personalized service we talked about, combined with increasingly sophisticated digital convenience.
So while individual branches might be fewer, access to funds and services is still widespread through these powerful networks, the shared branching and the ATMs. And their technology is rapidly catching up, or in many cases is already there, offering a modern banking experience. It sounds like a strong balance between personalized service and widespread convenience.
Exactly. You get the distinct benefits of personalized service and a strong community focus without necessarily sacrificing convenience or technological access in today's digital world. They're not stuck in the past. It truly comes down to evaluating what matters most to you in your banking experience. If you prioritize personalized relationships, community support, and robust security alongside modern banking tools, credit unions present a compelling and increasingly competitive proposition.
So, to reiterate that crucial point, credit union accounts are just as safe as bank accounts, backed by federal insurance through the NCUA. And while physical branches may be less numerous, their extensive ATM and shared branching networks, along with advancing digital platforms, ensure widespread accessibility and convenience. That brings us to takeaway number 4. Credit union accounts are federally insured up to $250,000 per account typed by the NCUA, just like banks are by the FDIC, providing comparable safety. And while they may have fewer individual branches, they leverage expansive ATM and shared branching networks, with many now offering strong digital banking options. Okay, so after hearing about all these benefits, the member ownership, the better rates, the personalized service, the safety, the community focus, and the expanding accessibility, who is the ideal candidate for credit union membership? Can anyone just walk in and join? Or are there still specific requirements? Is there a certain type of person they're best suited for?
That's a common and excellent question, and it speaks directly to the historical roots and unique structure of credit unions. It's tied to that cooperative idea. Historically, membership was indeed quite limited to people who shared a very specific common bond. This might have meant working in the same industry, like for airline employees, for the same specific company belonging to a particular union, or living in a very defined geographical community, like a single county. This is why you still often hear about credit unions specifically for teachers, or for employees of a particular large corporation, or residents of certain towns or counties. This common bond was designed to foster that powerful sense of mutual support and shared purpose among a defined group.
But I've heard that some are much more open now and that the common bond isn't nearly as restrictive as it once was. That sounds like it would broaden their appeal to a much wider audience, wouldn't it?
Yes, that's absolutely correct, and it's a significant evolution in the movement over the past few decades. Many credit unions have significantly loosened these restrictions over time, and now a vast number allow the general public to join, making them far more accessible than they once were. To become a member, you typically still need to meet one of their specific field of membership criteria. But these fields are often much broader now. This could still be your employer, or certain family ties to an existing member, like spouse, child, parent, sibling, even grandparent or an household member sometimes. Or your geographic location, meaning living, working, worshiping, or attending school in a particular area, which could be a city, county, or even a whole state in some cases. Or it could be membership in a specific, often very broad group, like an alumni association, a place of worship, a professional association, or even just a consumer group.
A consumer group, how does that work?
Yeah, what's truly interesting is that even if you don't fit any of those direct criteria, employer, family, location, many credit unions offer incredibly straightforward pathways to membership. Some, like the example you mentioned, Credit Union of America, and many others, offer membership eligibility if you join an affiliated partner organization, often a nonprofit consumer council or association. Sometimes joining that partner organization involves a small one-time donation, maybe $5 or $10, or sometimes it's even offered at no cost just to facilitate your credit union membership. This effectively means that almost anyone can find a way to qualify for membership at some credit union, even if their local ones have tighter restrictions. You just might need to look around a bit online.
That's really good to know. So it's not some exclusive club anymore.
Not usually, no. Once you meet one of their eligibility criteria, you simply open an account, typically a basic savings or share account, often with a nominal initial deposit of as little as $5 or $25. And just like that, you become a full member and an owner with voting rights. It's generally a very democratic and welcoming process.
So it's not as exclusive or difficult to join as some might still think, which is great news for many listeners who might have assumed they weren't eligible.
Mm.
Given that wider accessibility, who would you say really thrives with a credit union? Who are they an ideal financial partner for, based on everything we've discussed today?
In my experience, credit unions are an exceptionally solid choice for those who want their banking to feel more like a genuine community partnership and less like a sterile, impersonal transaction, a place where they feel known. They're especially great for you if you're not particularly fond of the big bank vibe and the perceived profit-driven motives, but you still want access to all the main financial services you'd expect: checking, savings, loans, credit cards, online banking, the works. If you're the type who's always meticulously looking for the most bang for your buck, meaning fewer fees eating into your funds, and better interest rates on your savings accounts and loans, a credit union is almost always a win. You'll likely save or earn more.
So the value-conscious consumer.
Absolutely. They're also an excellent choice if you truly value personalized advice and a supportive relationship. As we discussed, their representatives often genuinely get to know you and your financial situation, moving beyond a purely transactional interaction. Think of it as having a financial partner who understands your journey and goals. And for those who like to keep things local and actively support their community, credit unions align perfectly. They actively invest in local businesses, charities, educational initiatives, and other programs that directly benefit the place you live. Your money stays local and works locally. They're also often a fantastic fit for anyone who might feel underserved or overlooked by traditional banks, as they've historically specialized in serving specific niches and providing access to fair financial services for everyone in their field of membership.
It sounds like it's ultimately about aligning your financial needs and your personal values with a more values-driven approach to banking, where the institution's goals helping members genuinely align with your own financial well-being rather than potentially being at odds with it when profit maximization is the primary driver.
Exactly. That sums it up perfectly. It's about feeling connected to where your money's going and who it's helping within your local community while still receiving excellent, competitive, and secure financial services. It's banking with a clear conscience, perhaps, where the democratic structure ensures that the institution remains directly accountable to its members, allowing you to have a real say in its direction.
It's clear that credit unions are far more accessible than many realize and represent an ideal choice for those prioritizing better rates, personalized service, and a strong community connection over purely profit-driven banking. That brings us to takeaway number 5. While some credit unions maintain specific eligibility requirements based on factors like employment or location, many have broadened their membership to the general public, making them an ideal choice for those seeking better rates, fewer fees, personalized service, and a strong commitment to community values. Now, this deep dive wouldn't be complete without understanding the roots of this remarkable movement. It feels like it has a rich history. Where did the idea of credit unions even come from? Was it a modern invention, or does it have a long and compelling backstory? I find understanding the origins often illuminates the present, gives context to why they operate the way they do.
You're absolutely right. The concept of financial cooperation, of people pooling their resources for mutual benefit, has incredibly deep historical roots, stretching back centuries in various forms. But the very first cooperative financial institution in Europe that truly laid the groundwork for modern credit unions, called Spolak Gazdowski, or the Association of Administrators, was founded way back in Slovakia in 1845 by a man named Samuel Jurkovic. What's fascinating about this early endeavor is that it not only provided cheap loans from members' pooled savings to help them avoid loan sharks, but it also had a unique moral and community-oriented component.
Oh yeah, what was that?
Get this, members were actually encouraged, maybe even required, to plant 2 trees in a public place every year as part of their commitment to the community. Although this specific institution only lasted about 6 years, until 1851, it established foundational principles of self-help, mutuality, and a holistic view of community well-being that would prove incredibly influential later on.
Plant trees.
Yeah.
That's a truly unique requirement, especially for a financial institution. It speaks to a very holistic view of community well-being that goes far beyond just money. I mean, imagine your bank asking you to do that today. That's wild.
Indeed, and it's a fascinating insight into the foundational philosophy. It wasn't just about financial health. It was intrinsically linked to the holistic well-being of the community and its environment right from the start. This early emphasis on shared responsibility, long-term societal benefit, and mutual upliftment is really the ideological grandparent of the strong community involvement and member-focused approach we see in credit unions today. It shows that from their very inception, these institutions saw their role as far broader than just lending money. The modern credit union movement, as we largely recognize it today, really began to solidify in Germany during the mid-19th century.
Germany, okay.
Yeah, 2 key figures. Franz Hermann Schulze-Delitzsch consolidated the first urban credit unions in 1852, systematizing the concept of urban cooperative banks for artisans and small business owners. Then, famously, Friedrich Wilhelm Raiffeisen founded the first rural credit union in Hedsdorf, Germany in 1864, focused more on farmers and rural communities. These pioneers believed profoundly in empowering ordinary citizens to pool their resources to help neighbors avoid the clutches of predatory lenders who were rampant at the time, and to collectively improve their overall standard of living through mutual effort and financial self-sufficiency. Their innovative ideas spread rapidly across Europe, addressing a widespread need for fair credit.
And how did such a distinctly European concept make its way across the Atlantic to North America, particularly given the very different economic and social landscapes over here?
Well, the movement crossed the Atlantic thanks to visionary figures like Alphonse Desjardins, a Canadian parliamentary reporter in Quebec. He was deeply moved to act around 1897 after learning of a desperate man in Quebec forced to pay an absolutely exorbitant $5,000 in interest on a minuscule $150 loan from a moneylender. Just unthinkable usury. Horrified by this blatant exploitation, Desjardins dedicated himself to finding a better way. Drawing extensively on the European cooperative precedents, especially Raffesen's model, he established the first credit union in North America, the Caisse Populaire de Lévis in Quebec, Canada in 1901. He developed a unique parish-based model that truly took root and flourished in Canada.
And in the U.S.?
In the United States, the movement gained traction slightly later. The very first credit union in the U.S., St. Mary's Bank Credit Union, was founded in Manchester, New Hampshire in 1908. It was established by French-speaking immigrants, largely with Desjardins' help and guidance. And this founding was often born out of sheer necessity, as the larger Anglo-American banks of the era frequently rejected their loan applications or didn't serve their needs. This highlights the crucial and enduring role of credit unions in serving historically underserved populations right from the very beginning in America.
So the movement was truly born out of a real, pressing need for fair access to finance and a deep sense of community support, especially for those marginalized or excluded by the existing banking system at the time. When did it gain national recognition and federal acceptance in the U.S., allowing it to grow into the widespread institution we see today?
It was really in the tumultuous period of the 1930s, right in the depths of the Great Depression, that the movement gained crucial federal acceptance and truly began its national expansion across the United States. President Franklin D. Roosevelt recognized the immense value of these cooperative financial institutions. He saw them as a means to promote thrift, provide affordable credit, and help stabilize communities amidst widespread economic turmoil. So he signed the Federal Credit Union Act into law in 1934. This was landmark legislation. It legally authorized federally chartered not-for-profit cooperatives across the country, establishing the NCUA's predecessor to oversee them. This act significantly boosted public confidence, providing a solid legal and regulatory framework that allowed credit unions to flourish nationwide.
And did they flourish?
Oh, absolutely. Following this, credit union assets in America just exploded, tripling between 1970 and 1979 alone. That shows remarkable and sustained growth. It was fueled by increasing public trust and a growing demand for their member-focused services. Today, as we mentioned, there are over 103 million credit union members in the U.S. alone, a testament to their enduring appeal and effectiveness in serving their communities across the decades.
That's incredible growth from such humble, community-focused beginnings, truly inspiring. And is this just a North American phenomenon, or is this cooperative financial model a global force? Have credit unions spread worldwide?
Oh, absolutely. If we connect this to the bigger picture, credit unions are definitely a global force, demonstrating the universal appeal and resilience of their cooperative model across cultures and economies. As of 2018 data, there were over 85,000 credit unions operating in 118 countries worldwide. That's remarkable reach. Collectively, they served an astounding 274.2 million members and oversaw over $2 trillion in assets globally. While the U.S. leads in sheer number of members with around 101 million at that time, some countries have an incredibly high penetration rate.
Like where?
For instance, Barbados boasts an incredible 82% of its economically active population as credit union members, and Ireland an impressive 75%. They are deeply integrated into the financial fabric of those nations. This deep integration into local economies in diverse parts of the world underscores their enduring relevance and strength. This robust global presence, combined with the consistently high public trust, which, as we noted, stands at 60% for credit unions compared to only 30% for big banks in the U.S., really underscores their enduring relevance, inherent stability, and strength as a deeply trusted financial partner worldwide. They are truly a global movement of mutual assistance, still driven by those core principles from 150 years ago.
It's clear the credit union movement originated in response to profound financial needs, grew globally as a powerful alternative to traditional banking, and continues to thrive on its foundational principles of mutual assistance and member trust. That brings us to takeaway number 6. The credit union movement originated in 19th century Europe as a response to financial exclusion, spread to North America, and gained federal recognition in the U.S. in 1934, growing into a thriving global network with hundreds of millions of members due to its focus on mutual assistance and member trust.
Excellent summary. Now, let's quickly recap all our key takeaways from this deep dive into credit unions, summarizing the important points we've covered today for you one last time.
Okay, let's run through them. Takeaway number 1. Credit unions are member-owned, not-for-profit financial cooperatives that prioritize their members' financial well-being over generating profit for shareholders, a core difference from traditional banks.
Takeaway number 2. Credit unions generally offer lower loan rates, higher returns on deposit accounts like savings and CDs, and significantly fewer fees compared to traditional banks, translating directly into more money for your financial goals.
Takeaway number 3. Credit unions offer highly personalized customer service focused on building relationships, demonstrate a strong commitment to local community involvement, and provide exclusive member benefits, including valuable financial education resources.
Takeaway number 4. Credit union accounts are federally insured up to $250,000 per account type by the NCUA, just like banks are by the FDIC, providing comparable safety. And while they may have fewer individual branches, they leverage expansive ATM and shared branching networks, with many now offering strong digital banking options.
Takeaway number 5. While some credit unions maintain specific eligibility requirements based on factors like employment or location, many have broadened their membership to the general public, making them an ideal choice for those seeking better rates, fewer fees, personalized service, and a strong commitment to community values.
And finally, takeaway number 6. The credit union movement originated in 19th century Europe as a response to financial exclusion, spread to North America, gained federal recognition in the U.S. in 1934, and grew into a thriving global network with hundreds of millions of members due to its focus on mutual assistance and member trust. So, my final thought for you to consider as we wrap up is this. In a world that seems increasingly dominated by large, often impersonal financial institutions, what true value do you place on having a financial partner that is literally owned by you and its community? An institution where every decision, from interest rates to service offerings, is theoretically made with your best interests at heart rather than primarily focusing on the bottom line of distant shareholders. Is that cooperative model something that resonates with your personal financial philosophy? And could a credit union be the ideal home for your hard-earned money and your financial aspirations? It's certainly a choice worth exploring for yourself.
That's all for now, folks. Please like, share, and subscribe for more like this.